Joining us now to talk about the setup going into Oracle's earnings is Paul Meeks, Managing Director, Freedom Capital Markets. Paul, thank you so much for joining us this morning. Just had your colleague Jay Woods on as well. So it's a Freedom Capital Markets kind of morning. Let's talk about Oracle and the setup going into its earnings. What are your expectations overall?
So overall, I expect them to continue to show momentum. What I'm most interested in seeing is a couple of things. One is, do we continue the explosive growth that we saw last quarter in their infrastructure as a service revenues? And when I say that, the viewer should know I'm talking about something akin to Amazon Web Services and Microsoft Azure. I am more interested in traction there than I am in cloud revenues that are serving software as a service or their legacy business, which is enterprise resource planning software. The other thing I think is very important is, what is their guidance for capital expenditures? Right now, they're already spending about a $80 billion per annum clip. And of course, that's all going, or at least mostly going, for AI data centers. So those would be, in addition to overall revenue and EPS reported and guided to, those would be my markers that I'm following.
Paul, investors don't seem to mind how much spending is happening, given how shares have performed year to date. Do you think that's a mistake?
I think over time, we'll have to get back to generating free cash flow, because with their extra large Capex spending last quarter, this company actually burned cash. And over time, it has been a big cash flow builder. So we'll see. They obviously have a very strong balance sheet, very deep pockets. It's a good thing, bad thing. The good thing is, by their capital expenditures, they're showing the AI opportunity that they hope to seize. The bad thing is the cash flow burn. We'll see how it's going to be longer term, but it seems to me that over the next couple of years, maybe really dramatic Capex expenditures continue, and then we'll see it stabilize over time.
So let me ask you about that free cash flow burn. You know, given that it was in the red last quarter, do you see that as a red flag, or just kind of the cost of doing business to keep up with, say, AWS, Azure, et cetera?
I think it's the latter for now, but I expect that over time that we will get back to building free cash flow. If we don't, then it would be a red flag. But in the near term, and maybe even the intermediate term, the next year or two, this is a mark that they see a big opportunity, and they hope to convert that back to cash flow build and also have a nice return on investment on all these AI infrastructure building.
Let's talk a little bit about cloud infrastructure. So last quarter, that grew 52% year over year for Oracle. Does sustaining that matter? Is sustaining that enough, or does Oracle need to accelerate?
I think if they sustain it, that would be fine, because last quarter, that was a big beat, much higher than even the bulls were expecting. So if they could continue at this clip, then this part of their business will become a bigger and bigger part of the overall, and we'll get this company back, which we haven't seen for a long, long time, to solid double-digit year-over-year increases in revenue and EPS.
Okay, I want to go to some of the notes that you talked about. The bets that it's making on par with Google Cloud, Azure, AWS. And you make the point, we don't know for a fact that once we get to the other side of the pipe of all this AI infrastructure building, how successful the AI software will be. Can you talk to us a little bit more about what you mean and kind of why you, I guess, maybe have concerns around that?
Well, what we've seen in the last couple months, maybe even the last year, are more and more use cases that makes me think that AI will be monetizable. I never thought that AI wasn't going to catch on. It's obviously ubiquitous, and it'll continue to be. Just like the internet changed our lives in the late 1990s, early 2000s. However, what we saw in that crisis when the bubble popped, and what we may see here again, is that, yes, something can be ubiquitous, but it also may not be monetizable. So for some, it'll be monetizable and it'll create some companies that we've never heard of that will be huge market cap companies in the future. But for other companies, even though they talk about, hey, AI being a benefit to them, it actually might disintermediate them. Like I think some of the other ERP software companies like a Salesforce.com.
Okay. All right, Paul, we'll leave our conversation there for now in terms of expectation consensus. Street looking for adjusted EPS of $1.47. Revenue is expected to top $15 billion. That's Paul Meeks, Managing Director, Freedom Capital Markets, with the expectations for Oracle.